Okay, folks, good morning. Welcome to a CPI Wednesday morning. Took me an extra minute or two. There seems to always be something going on. Today, my kids are staying at home and they were desperate to find some snow pants so they can go play in the snow. So I had to deal with that. But we are all set. We had the market drop over 200 points from CPI here this morning. Let's see. From opening price in that first candle, 233 points in less than a minute. Pretty crazy. We'll see what market wants to do. I'm going to be fairly cautious today, folks. And the reason is I've lost money back in the day you doing and messing around with CPI. I'm going to be very patient. I'm going to wait for my key levels, A+ setups like we talked about yesterday. And we're going to wait for those perfect setups. So we're going to go ahead and rock and roll here this morning. If you're here for the first time, welcome. Online Pay with Paul. Is there a shorter name? I'm assuming Paul. Good morning, Paul. Buenos dias. Glad to have you this morning. Let's go ahead and open in prayer. Father, we honor you. We thank you for the opportunity to trade. Lord, give us wisdom and discernment to navigate the markets. Give us patience upon patience upon patience. Father, we just want your eyes to see what the market is doing, that we might not get manipulated or taken out of trades because of emotional trades, because of impulsive trades. We just reject that. In Jesus' name, amen. Good morning. Okay, let's rock and roll. Let's see what the market is going to do for us today. Okay, so here's what we're going to start with. We're going to start with marking. We went ahead and already marked out our... That's okay. It's here. Can you zip up the top so it... Yeah, give me 1 second, folks. I got all my kids staring at me at the door. They're trying to go out play in the snow, and we don't have all the proper snowsuits, and that's what I'm trying to get them all set up on. So we're all set up now. Hopefully we're good. All right, so right here is our new day opening gap. Those two blue dotted dashed lines. All the other gray ones that you see here are previous days and previous weeks. I'm not ready to take them off the charts, so I went ahead and I marked them or change the color. Okay. We already ran the equilibrium of yesterday's or the day before that's range, and we don't need some of this other stuff on here. Okay. If we jump out to the 4 hour, let's see what the 4 hour has to offer us. Honestly, with how much expansion we had on this 4 hour, if we don't get hardly any retracement on the 4 hour time frame by 10 a.m., I'm really thinking we're probably going to target this low right there, which came from Sunday's low. So this is our weekly low, or this is the current week's low. So it's not a weekly low, but it's our current week's low. Go ahead and go. All right, hurry up. Good to be a father. Congrats. It's a new day. Good morning. Latest. Yes. It is. It's a new day. But that's kind of where I think price is going to go. If the 4 hour candle stays relatively large like this and we don't start seeing it move back this direction here. So we'll see what price wants to do there. But if we go to the daily time frame, we have really this gap right here in price action that we've filled a portion of. We filled a portion of this gap right? We filled a portion of that gap, but we still have this portion right here that has not been filled down here. So price could be pushing for, again, like I said, that previous day low from Monday's price action. So we'll see what that has to offer. Thank you for putting your name back up there, Stan. That's helpful. I forgot. Wow, that was hotter than I was expecting. Oh, hot. And we are midweek, so honestly, it's not going to be really easy to determine higher time frame bias. I shared yesterday that on a weekly time frame that I'm bullish. I'm bullish on the weekly time frame. Here's the weekly candle right here. I really would like to see these levels ran. I really think we could see that. But it's just, honestly, it's a little chaotic market we've been seeing. Got 2 minutes till market open. We got a large new day opening gap sitting on in the form of a bullish or discount new day opening gap. But I'm not interested in touching that. It's just too large of an opening that I'm not going to mess around with it. Yeah, he's testifying. I expect it to probably follow within the narrative of whatever price is doing. We just need to figure out what that narrative is. So what I have here is I have marked out our high and our low for our new week opening gap from this week, from Sunday, from Friday's trading to Sunday's trading. And then I broke it down into these separate quarters here. And we came and we basically touched the midpoint, the middle of that new week opening gap, and have basically retraced from there. Morning, Tony. T. Ted, good morning. Northern, good morning. So I'm not doing anything with the 930 model this morning. Let's just see if it wants to pop higher or not. All right, there's our 930 candle. So it looks like it would have given us something, but I'm not messing around with it when we got that large of an opening gap, and it does look heavy. What does silver and gold look like anyway? Gold, man, we're about at 3,000. I really was wanting it to get like down to here. I really wanted to get down to 2,600, and I was gonna buy some more, but it never did, and it just kind of took off. All right, so we tagged the new week opening gap from the 3rd, and we are there now, pushing lower. Got a 2-minute candle right here. 2-minute fair value gap that closes in 38 seconds. And I've reduced size. I'm only to 1 micro here today because I'm not messing around with all this volatility. There's so much volatility. Last thing I want to do is blow my account. And look how it stayed inside of that fair value gap. I kind of expect a lot of overlapping candles back and forth like this, making it basically look like a barcode, but we'll see. I mean, this candle itself doesn't look that way. 31 handles right there. Also, for you folks looking that are that use prop firms, Apex is doing an 80% off, so you can use the code DTJ and you can get 80% off your next eval account. I'll drop that in the chat if you want to use that. And that's all I'll say about that. Oh, I will say also, I am doing a Valentine's Day promotion for those that are interested in joining the Purpose Driven Trader Academy. And the code is VDAY100. You can check that out as well if you would like. What is a handle? That is 1 point. A handle is a point. So when it goes from 1 to 2, 2 to 3, that's a point or a handle. I got into using handles. I don't know. I think it was probably from ICT or other people that were talking about it. All right, so it looks like we're breaking out higher towards, I don't know towards what, previous day low. That's the only thing I can think that we could run towards. It's the most obvious level that it would run towards. We did leave a fair value gap right here. You guys can help him. We really don't have much of a breaker here. I don't like the idea. We do have a breaker here. You could call this a breaker because we made a lower low. Right here, that could be an entry point potentially. We're looking at 10 handles. If we can get back down into here, and we reject off of it, I may look at that as a breaker for the upside. I just don't know if it wants to get all the way back down in here. It may just take off from where it's at. It wicked the first fair value gap. When did it do that? Did I miss that, Ted? I don't see. I would like it to wick the first fair value gap. Oh, the volume imbalance right in here. Oh, so you're saying include the volume imbalance. Son of a gun. You're right. Look at that. That's nice. Nice little tag of the volume imbalance. Yes, you would. Yeah, anytime there's a gap connected to a fair value gap, you always include the gap. We could really just climb this whole way, folks. It wouldn't surprise me if we just... The only level that I'm really interested in and seeing how it reacts is the previous day low. I tried to play, I did a play, Ted, or before the market on seeing if we wanted to fill the new week opening gap as well. But I only did it with a micro. I'm like, I'm not messing around. I thought it was gonna be like right here when it was doing that. I think this is our obvious close target. It's 50 points away. If it can give me some type of retracement, I'll look at trying to take a long to go towards that. There's no resistance until we get here, guys. There isn't any. I mean, look. When you look at that, no resistance in all of this price action up to here. I just can't do it. It's just... It's speculating. as we just continue its march. As we continue the beautiful green parade towards the previous day low. Almost there. Let's see if it reaches. Wouldn't surprise me if it drops right before it actually touches it. There it goes. See how it gives us our first red candle prior to hitting that level? It wants you to freak out. It wants you to think that it's going to go lower. So then you get stopped out, you close your trade, and then it explodes through those levels. So now I want to see how are we going to react to this. Are we going to roll over here? Because that would be my first opportunity to potentially look for something. Honestly, you probably could take a short here and get a decent reaction. I feel like my screen's frozen. Go talk to mom. I'm working. No, go talk to mom. We need to close below this 4-hour fair value gap if we're going to see lower prices, in my book. If we're actually going to see price really want to push lower, then I really need to see it close below this 4-hour fair value gap. If we don't, then we may just see continued pushes higher. We just need to wait for some more structure. I need more structure. Price is not just going to make a complete V, and if it does, then it can go without me. So let me ask you, where is our entry? Besides this, the opportunity of coming down into the first fair value gap, which I'm not sure I probably would have even taken that. I just don't have an entry. Not a good one, at least. This is a joke. Manipulation on a grand scale. Conditioning real-tailed side to side that markets never go down and that they'll always bounce back. Happens around every large top. Yeah. And to be honest, T, they want everybody to think the market goes up, and they will make the market continually move higher because that's how they get more liquidity into the market. When people think positively about the market, that it goes higher, then they're going to get more people engaged. I'm probably going to sit out on my small account challenge. I'm probably not going to take anything with that because the volatility is going to run through 20 handles very easily if I'm on the wrong side of it or don't get the perfect entry. There's your order block if you think price is going to go higher from here. We got 4 minutes till 10 o'clock. I'll wait till 10. That order block looks pretty good. Not gonna lie. Overall, the market does go higher and higher and higher, trying to argue that. I suggest looking at the big trend. No, I'm not trying to argue that at all. No, we just know it is. That's just how it runs. I ran out of milk this morning. Had to use almond milk for the rest of my coffee. It's not very good. Not gonna lie. It's not very good at all. Yeah, so right now, as far as a bias goes, folks, I'm 50-50 on both sides of the market. If we find support here, I could see us moving higher. If we lose support here and come back up, we could run up into this breaker and continue lower, which there's reason for us to go lower as well. $10 o'clock in 40 seconds. If we get some sort of wick lower but still close above previous day low and get a displacement, I might go long on that displacement. But I'm not going to go long on the stationary. I need to go long on the displacement. or I wouldn't go long in this consolidation. All right, so 4 seconds. That's why you don't go long on that. It supported that whole idea, and then right now it's wicking lower. So what are we waiting for? We want to see if this candle, if the body closes back up in here. There's a little sweep of liquidity, okay? Also, you got to understand that the 4-hour just closed above this 4-hour fair value gap. Okay, this candle's opening price is the opening. This is the close price of the last 4-hour candle, and it closed above this 4-hour fair value gap. All right, so we had a nice large body candle there. We do have a 5-minute breaker down here. Low, high, lower, low. I was willing to take a stab if it came back up into this level, but we didn't. So I do want to be bearish. I don't want to go against this big move lower. I want to treat this as just a retracement to potentially go lower. So I do want to see it run through this breaker. I think there's more reason for us to go lower than there is for us to go higher. Look at the hourly. Hourly came back up right into the hourly candle right here. Beautiful level there. Here's the 4-hour. We closed above this. We have 4 hours. This could easily come down here, wick it, and still close back up here. And we also have the rest of this new week opening gap sitting down here. Right here. Got a low number of viewers today on the stream. Let me make sure that we did run the midpoint. All right, so we did run the midpoint of that drop. Here's equilibrium, and we came up into equilibrium right here. This portion of price action came up into equilibrium. So that's all we need to see it continue lower. Honestly, a close below this first fair value gap would kind of be my confirmation that we're running lower, and we could take the short against this low resistance right here. I like that idea. I also like the idea of us coming back up into this breaker right here and taking a short off of that. Okay, we wicked down into the 5-minute fair value gap. An aggressive response higher, but we'll see if that's going to be sustained or not. Well. Don't you love like these types of candles right here? These candles are the ones that freak people out. It's like, wow, it went lower and now it's higher. This must be ready to explode. And then it just consolidates and you get stopped out and you lose money. So I can't speculate. You guys see me every once in a while looking down and writing. I'm writing notes to myself. I'm writing the things that I'm saying out loud. I'm writing it on paper to just instill it, to make sure I'm following my plan. So right now what I'm writing down is my success is in my ability to follow the plan and not speculate. I don't want to speculate. Speculate has lost me thousands and thousands of dollars. Three minutes left on that 5-minute candle. $15-minute candle reacting off of the breaker up here. Still inside there, this 15-minute BISI right here. I don't think I'm afraid to, well, it's not going to do it here. It's running right through that breaker. We'll see where it stops in the next 40 seconds, seeing if it wants to respect it or not. But that's not the kind of reaction I want to a breaker. Let's see if it gives me a green candle here. If it comes back down and touches the breaker, I might use that as an entry to see if it wants to give me maybe something to this swing high. But ultimately, I'm looking at something like this. That's kind of what I'm looking for. I want it to run lower. Midpoint of this wick. Look at that reaction there. That's supportive for lower prices. There's just too many variables right now for me to want to throw money at this. At the 618 fib. Okay, so we went through that wick. See where it closes. Looks like it's going to close this inversion right here. Could target this swing high. Yeah, so there's the target for that swing high. Looks like it played out. Right off the breaker again. It was honestly what changed my mind and what kept me out of taking this trade was the consequent encroachment of this wick right here and seeing it reject that and staying in the discount portion. That is the reason why I did not grab when it came back down to this breaker again. This by far though was the best setup that we could have planned for. So nothing on the 2 minute. Was something on the 3. Nothing on the 4. All right, so that reaction through the breaker is not what I want. That's not what I want. How's it, Tyler? Any trades yet? No, sir, not really. I took a couple pre-market, but I haven't taken anything right now. I really wanted to see how we're going to react to this breaker right here. The reaction that it gave us through that's not very attractive for a short. Honestly, it would be more attractive for a long at this point. And I'm not opposed to that. It's a little late from when I wanted to get in. This is the fair value gap before we hit those highs. So we could do a target. We could do a long here towards these highs right here. There's our close. I'm going to take it to see if it wants to give us that reaction to that high, and I'll move my stop to break even as soon as it hits that high. And it has not given it to us yet. I'm not liking that body. I'm going to keep a tight stop here. So I got tapped out right there. I wanted it to go. It didn't. It came up within a tick from that high. And it's probably going to go right now. There it is. Yeah. All right. All right. I re-entered that long, and I moved my stop to break even. I'm going to see if this wants to actually pump higher. My stop's at break even for me. No. Go. No. You can go talk to Mom. So I have my stop at break even. If it stops me out of break even, it does. But I'm looking at it pushing above this high and pushing higher. I need a wick right above this level here. Just to show me. Okay, there we go. That's what I want to see. Okay, there's relatively equal highs right now. I want to see this push through this, and it would be nice if it just takes off. I'm going to have 3 contracts to sell there. All right, sold 3 contracts. I got 2 contracts left. I will hold this all the way to the data high if it will give it to us. All right, that's what I wanted to see, was this push higher right here. I'm going to see if that just wants to continue to run for us. Our next point of interest, to be honest, there really is none. I don't know. We could do the new day opening gap. New day opening gap is sitting at 21,793. 21,793 is right here. We'll put a horizontal line on it. It's about right there. J-Bass, what's going on, my friend? We are currently sitting in a long right now. I took partial profits, stops at break even, free trade at this point. That trade put me in the green, and we're going to see if this wants to run, how high this bad boy wants to run. I would love for it to go all the way to the data highs right at 830, but we'll see if it wants to do that or not. If it gives me one more push, I may take one more contract and let just one contract run to take some of the extra profit we have here, because that's nice profit. Or I can just have the balls and I can hold. That's really what I need to learn to do. Is learning to hold. Man, I'm hoping. I'm looking forward to the confirmations of JFK and Tulsi Gabbard. I've just been kind of sitting there waiting for those to happen. It's supposed to happen today for Tulsi, and then within 72 hours, 30 hours from that point for RFK. Dang it, that's not what I wanted to see. Come on, let's bounce back. Turn green. This is the hardest part. I hate this. Just let the trade play out. $11 a.m. Yeah, I think you're right. This is not good. Yeah, it's at the breaker. I'm hoping that we find support there and we push through this. Man, that would make me feel like $1 million. Yeah, it's only 2 micros, but still. The thing that I want to become better at is holding these trades. Is not just taking profit and running. So Need to get above this inversion right here. Small little inversion. Sitting right there. If we can't get through that, we probably will see it run lower. I'm going to take one contract off there, and I'm going to hold the remainder. Limit, sell limit. Question for you, Tyler. On days where we are waiting as novice traders, do you suggest to paper trade to get more reps in? So I would have said yes before. Now I'm going to say no. Your reps are going to be in your back testing, J-Bass. Your reps need to be in your back testing. Your reps cannot be in your forward testing in a live market. It can't be that. The biggest rep you can take in a live market is your ability to not freaking take a trade. That is now where I'm sitting right now. That is more valuable to me than me taking more trades. I should have taken more trades on my back testing when there's zero risk. Yes, there's zero risk on demo trades, but you're exercising a muscle of taking trades. You're exercising a muscle of clicking the button. Really, if there's not a setup, you shouldn't be clicking the button at all. And if the setup's there that you're waiting for, then you should be taking that trade on an eval or on your account, and then you actually let the trade play out. So right now, I took one trade, and that trade was based on the inversion that you're looking at the bottom of the screen. This inversion was the reason I took the trade. So outside of this reason, there was no other reason for me to take the trade. So should I sit and should I just click the button if I see something else that's inferior to that? The answer is no. Logging out and jumping into a demo will protect your account more, for sure. But you still, my struggle was that we want reps on executing when the biggest thing that has held me back, and you talk to any other trader, is not reps and taking trades. It's reps and saying no. We didn't say no enough. We didn't put handcuffs on our hands long enough from taking just trades and random setups. Most of your success is going to come in your ability not to take something you think you should take. That's just the truth. That right there is everything that I write down on this sheet of paper, and I have, guys, I'm not kidding you. You guys see all that? This is sheets and sheets of me writing down affirmations. And 99% of all of them revolve around waiting. They revolve around following rules, waiting, being patient, not taking impulsive trades. I'm not kidding you guys. The area that most traders lack is in their self-discipline to not take a trade, including myself. And that is where, if you can exercise that muscle right there will take you significantly farther than taking demo trades when you think you see your setup or not. No, if anything, that was beautiful. This is what I wanted to see. That was amazing. Now I wish I had all 5 of my freaking contracts. What did we run into? No, don't lose all of that. I'm probably gonna take profit. 792. Is that here? No, let's let it run. Let's see what it wants to do. I want to see a fair value gap left here. I want to see this fair value gap left. We want to see this stay unfilled. If this fills, then I might change my position on selling. All right, it just filled it all. Let's see what it does here. I really wanted that to close green, but let's see if we can get, I doubt it. That's gonna suck. I'm gonna close it. I'm closed on that trade. I do have 2 evals that are currently still in play. Once it hits 3,000, I'm probably going to take it out. And I missed my opportunity for that 3,000. I think it's going to go lower. All right, I'm closed out on everything. I had 2 evals that I took that long with. Those are about $300 away from passing. I should have sold it up here. It would have passed, but I wasn't in that. Wasn't paying attention to them. Yeah, that's not bad for today. Ran into the new day opening gap from the 5th, from the 6th. Yeah, I saw that right there. Or here, let me bring you guys back to my normal screen. Yeah, right here is kind of what it ran into. And when I saw this giant candle and then we lost most of it, that was disappointing. I wish I sold some up here, but it is what it is. Still turned out well on the day. Still haven't taken anything with my small account challenge. I'm not sure I'm going to take a small account trade. Lenu, how many evals do you take a month? I don't. When I get to my 5, when I have 5 funded accounts, I slow down. So let's see, for the month of February, I've taken 3 for the month of February. That's what I'm sitting at right now, and I don't plan on taking any more. But it's not, it can't be focused on that right now for anybody that's, if your primary goal is education, if your primary goal, obviously everybody wants to make money, but your primary focus needs to be education. All right, so this right here, I'm interested to see if we're going to close below this inversion, which we haven't yet. But if we close below that inversion, I'm interested to see if it wants to run for this liquidity there. I doubt it. I would rather see it find support here and continue higher. But I do know, even just as I look at my own trading journey, I know that I need to get used to this before it actually runs the direction I want. And that's the biggest struggle I've had when I'm using lower contract size, is letting these trades really run and being scared out of the position and taking profit. Now, there's nothing wrong with taking profit. Like, from my entry right here to that high, that was 100 handles. But I didn't take that exit. I took the exit right here. So I exited on 66 handles. That's great. I mean, there's nothing to complain about. I just wish I would rather take my exits on the green candles moving higher towards my target instead of always taking it on the retracement. Now, will this retrace all the way down here? It could. I'm glad I took my profit when I did. But that's definitely an area for me. My focus isn't on profits. It's not on profits. It's on letting the trade play out and not getting scared out of position and being okay with a break-even trade. That's the area that I'm trying to improve on my trading. Also, it's taking a one and done type trade. I took one trade and I'm not going to be trading anything else on my funded account. I'm done. Could there be absolute great setups that come up again? Yes. But the thing is, like I was saying and sharing with JBass, is I'm actually strengthening a muscle right now by saying I'm not going to trade anything else on my funded account. If you go into a demo account and you start just clicking buttons, or you go to an eval account, what you're really doing is still fulfilling or still enabling that lack of discipline to be able to walk away. And the truth is, I'm saying that I'm literally saying this to myself, is I gain more in walking away and not taking any demo trades, any other trades, than I do by continually clicking the button. I can come back later after the market's closed, and then I can review everything, and then I could go into replay mode and really start exercising my skill of analysis. But when it comes to live market trading, when you know that you could make money, you need to have more self-discipline and more grit on being able to say, no, I'm not going to let my feelings of wanting to make money outweigh my rules and my responsibility to preserve my capital. And there is a muscle that grows in those moments. I can't tell you how many times that I've made money. I did a blog on this. You can find it on X. I talked about it, and I think I titled it, "Your Biggest Losses Start with Wins." Is you end up having a great day, you have great wins, and then you're like, oh, I'm feeling great. Oh, this looks good. Let's just take a small trade here. Click, loss. Now you're dealing with these emotions of wanting to try to get it back. And that is absolutely destructive, and I've lost thousands of dollars, and I've lost several accounts because of that right there. There is, when you can accept and believe, truly believe that there's more value in you walking away, you will start seeing more success. Have you tried a 300K eval account? Heck no, I won't do an eval, 300 account eval, Lenu. Let me explain why. Okay? I'm not going to do a 300. I'm going to tell you a 250K because I know the numbers for 250K. So if I was to get a 250K account, for my eval account, to pass the eval, I would need to make $7,000. Okay? Now, I understand that you're going to trade different on an eval account than you would your funded account, but let's assume you don't because you're very disciplined. When you trade your eval account, you have to make $9,000 to pass that 250K account. If I get a 50K account, here's what's going to happen by the time I hit that $9,000 on that 250K account. I'm going to pass my eval. Oh, it's 15K to pass. Thank you. It's 15K, not 9K. So here's what's going to happen. On my 50K account, I'm going to pass my $3,000 eval target. I'm going to get out of my $3,000 buffer level on my funded account. And then from that point on, I would have made $9,000 that I would have been able to withdraw. $9,000 I'm actually going to pocket compared to taking a 250K account and having to make $15,000. Now, this is assuming you're trading your eval and your funded account the same. And I recommend you honestly trade it the same. When I took this trade right here, I copied my eval accounts. My eval accounts were in this trade. I'm not trading it any other way. I'm trading it the exact same way I'm trading my funded account. But the difference is I would have made $9,000 compared to you still trying to pass your eval account. That's just ridiculous. And you don't need a $300,000. You don't need a 250K account. The only thing I'll argue for is you can almost get away with a 25K account, but I just felt the drawdown limit was just a little too low, too shallow for me, because it's only a $1,500 drawdown, that it was too small. So the nice balance was the 50K account with a $2,500 drawdown limit within your buffer limit. So, Laney, I would save your money on those higher accounts. Save your money on those higher accounts and really focus on just a 50K account. You don't need more than that. This is why they do all those extra promotions on those higher eval accounts, okay? I'm going to expose a little bit of Apex here. I love their product. I think what they're providing to the community is extremely valuable. However, they're in the business to make money. So the promos that they do, think about it. I believe right now they're doing a promo where any $250, $300, or $150, $250, and $300 accounts you can get for just $60. They're not doing that. They're not doing an extra promotion for the 50K account. No, because they know that it's more work. It requires more for somebody to pass these higher accounts, and they make more money in the process. So don't fall into the trap. Don't fall into the trap. They provide a great product, but they're still in the market to make money, so they have the right to promote the accounts they want to promote. And if they promote the higher accounts to make it, the same price as a 50K account, don't fall for it. Even when, about 6 or 7 months ago, they did this huge promotion where they made the 250K accounts the same price as the 50K accounts. I didn't buy a single one. I'm like, heck no. I'm going to pay the same price for twice the amount of work, 3-4 times the amount of profits that I have to get. Why? Why would I do that? If I have really proper risk management, I don't need to worry about having my accounts draw down $2,500 because I'm properly managing my risk. People get those bigger accounts because they want the bigger drawdown money, but in reality, they're tricking you. You're being tricked into getting something that has a lower probability of success because they know that a majority of traders don't know how to manage their risk. So they know they're not going to pass those eval accounts. They probably have the statistics that show how many people are passing a 50K account and how many people are passing the 250K account, and I guarantee you the number is less on the higher accounts. Guarantee you. So they're going to promote the higher ones to get more people to do it because there's a lower percentage of success. They're in the business to make money. I'm just going to play the game. Play the game the right way if you're going to play in the game of prop spaces. They make money from you not passing and paying for more eval accounts. They do. Just accept the truth. It sucks, but they are providing something that makes it less risk if you can manage yourself. It's like going to the casino. If you can control your impulses and play games that give you a higher probability, you could potentially walk out of a casino with money. But the problem is 99% of people don't. They just don't. Because they just do things they shouldn't be doing. And that's what they're betting on. Is most people don't know how to manage their risk. Most people don't know how to manage their emotions. Most people are just going to ignore the inner voice inside them telling them to stop and walk away, and they're going to blow their account. And so they promote these higher accounts because there's less probability of success for you. That's just the truth. So I'm playing the game. I'm playing the game to make money off of them. And you can do it with a 50K account, less money out of your pocket, enough drawdown risk to protect yourself, and the profit target is only $3,000. So in that eval account, in the 2 eval accounts that I took, Let me show you. I'm just going to pull it up. I'm going to show you guys, okay? Not right now, Benjamin. Yes, you can get whatever you need. All right, so let me show you guys. All right, so right here are a couple of my accounts, but the primary one that I want you to see is these ones right here. These top two are the new eval accounts that I bought. I took one trade with these. One trade. I did 5 micros, and with 5 micros, I just about passed. Now, I did pass it on the wick higher that happened right here, but I didn't close the trade because I wasn't paying attention to it. So I did that in one trade. It's not, $3,000 really is not that much. You don't have to, it's not a huge amount to actually have to come across to be able to pass your account. $15,000 though? Come on. Heck no. Passing eval is not tough. Keeping the funded account is for me. Understand? So it's not an issue of you getting an account then, Lenu, getting an account that gives you a higher drawdown. No, that is trying to put a Band-Aid on the issue. You learning to manage yourself is the issue, and you going for a larger account that gives you a larger drawdown limit is trying to put a Band-Aid on the issue. And I promise you that Band-Aid will come off. That Band-Aid will bleed through. Because the Band-Aid, that sticky Band-Aid ain't very sticky for very long. It might cover you a little bit. You might see some success because of it. But you're not going to see sustained success in your trading if you don't address the issue and allow that what do you call it, scrape, that cut to heal. You need to get rid of the core issue. You need to address the core issue. And the core issue, if I was to guess, is managing your risk, following your rules, and knowing when to walk away. All right, so look at this price action right here. We made a market structure shift right here. All right, market structure shift right there. So now what I'm looking for is if this truly is a market structure shift and we are going to see lower prices, I'm looking at this as a bearish breaker to the downside. That's how I would treat what I'm looking at right now. And if it really wants, it could do one of these, come up into our breaker, come down, find resistance inside of this 5-minute fair value gap right here, and then it could move back higher. So I'm not looking at that breaker as the entry that's going to take us down to the low of day. I wouldn't treat it like that. Tyler, is this your Sermon on the Mount? It's the sermon I'm willing to die on, so to speak. I know it's the answer. It's the answer to everybody's issue with trading. Yeah, I did another blog. There's just a little loud here. I did another blog where I talked about how you have to suck it up. You have to suck it up as a trader, because the reality is whatever level you think. Sierra, you're going to have to go back and listen to it. It's a whole spiel, and it's 100% worth you listening to. But you'll get a glimpse of what I'm talking about here in a second. I did a blog on how traders need to suck it up. Because the truth is, whatever level of commitment traders are at right now, I promise you there is a deeper level of commitment. There's a deeper level of commitment that you can commit yourself to see yourself successful. All right, so you're saying, I've done everything I can, Tyler. I've tried it. I've managed my risk. I guarantee you that there's a deeper level of commitment. I guarantee you there's another level that you could commit to that's going to get yourself to the next level. Think of yourself in the gaming. Think of if you've ever played a video game where you're stuck on a boss level. And you can't do it. You can't do it. I've tried everything. But guess what? You try again, you do more, you commit to beating that boss, and then guess what? You get to the next level. You did what it takes. You did what it took to get to that next level. Well, in trading, it's the same way. If you're finding yourself struggling on keeping a funded account, well, there needs to be a deeper level of commitment you commit yourself to make sure that doesn't happen again. Because when you find that deeper level of commitment, which sucks, because here's what those commitments mean. Taking one trade a day. Managing your risk to only take a single micro contract. Only taking trades where you see 1, 2, 3, 4 check marks of your criteria and avoiding everything else. Walking away at 11 a.m. These are the deeper level of commitments that I'm talking about. Because that is what it takes. You might find yourself following those deeper level of commitments, 50% of the time, 75% of the time. Well, can you get yourself to 90% of the time? Can you get yourself to 100% of the time following those really strict rules? Because it's that deeper level of commitment that it takes to get out of the current place that you're stuck in your trading. That's what it takes. And one of the reasons why I wanted to do a small account challenge was for that very reason. Because I've never done it before. I've always done my funded accounts. I got profitable that way. But I knew that there was a different muscle that I needed to exercise by proving to myself that I could become profitable in a small account challenge. Now, the small account challenge has not gone the way that I want. I'm green. But I've out of 19 days of trading, I've been profitable 5. And I'm green. Let me say that one more time. You can follow the whole journey on X, and I encourage anybody to do so because it's been very challenging, but also very rewarding in the process. I've taken 5 winning trades out of 14 losing trades. And I'm up on my account. I'm green on the account because of 3 things. I just told you. 1 trade per day. Proper risk management. I'm only allowed to take the model that I've determined to be the model that I'm going to take, which is an inversion or a breaker. If it's a momentum trade and it's running higher, doesn't count, can't take it, won't take it because it's against my rules. Now, in this process, I've had to refine some of my rules, primarily the issue of risk management, because out of those 14 losing trades, 6 of them got stopped out and ran in my direction. So a huge number of those trades actually were winning trades, but because my stop loss was just a little bit too small, a little bit too tight, and the Nasdaq is very volatile, it hit my stop loss and ran the other direction. And I could not do anything about it because I have a rule of 1 trade per day. And admittedly, one time in the last 19 days, I broke my rules. I took a second trade because I was pissed. And guess what? It was another losing trade. So, what am I telling you? There is a deeper level of commitment you can commit yourself to. The problem is most people don't want to commit to the time that it takes to do it because it takes way longer than what they were wanting it to take to become profitable. Most people are thinking a couple months, yeah, I can do that. Yeah, I'm going to commit. It took me 18 months to get profitable. And I still have such a long ways to go. And when I say profitable, I'm not making millions of dollars. I'm covering my mortgage. I'm covering extra bills in our house. But it's not where it's replaced my income. No, I'm not there yet. And I will be. But I know that the level to get there is going to require a deeper level of commitment on my part. And that is what I am. I am committed to do that. I am committed to that, no doubt. 100%, I will do whatever it freaking takes. And if that means taking less trades, if that means taking 1 trade a day, if that means only taking trades when I'm only allowed to take trades, then that's what I'm going to freaking do. Because that's what it takes. I've seen it too many times. I'm convinced that that's what it's going to take, and time will tell. Time will tell if I am correct or not. So we are back down to the breaker. We're back down to the market structure shift. I want to see if we're going to break lower here. And then see if it wants to do one of these here. Boom, boom. Maybe something like that. That's what I would like to see. And I'm not taking a trade on my funded account. I probably will only take a trade on the 2 eval accounts and see if I can get those to be passed today. But I'm not too worried about it. I'll pass them tomorrow if I have to pass them tomorrow. Because we are at 11:11 right now. Oh, I saw that come right up into there, and that looked really nice. It was that wick right here. So we closed below it, and that wick right there is what I wanted to take. I wasn't set up for it. Son of a gun. That would have been nice. Nice, nice, nice. Instant 20 handles. I would have even taken that on my small account challenge. That's the kind of trade I'd take on my small account challenge trade. Sierra, I agree to find myself losing because I don't have a good plan or trading strategy. Sierra, I just play the momentum trade, and I find I can't sustain a long term for the way that trade or where I want to be as a trader. Yeah, so the issue, yeah, you've identified the issue. Now it's a matter of you committing to the time it takes to identifying the model, the trading system that you want to commit to. For me, it's a breaker. We had an entry right here that I did not take. I just wasn't ready, and it could have gave 20 points, easy 20 points right there. Now the question is, do we want to see it come back up to it, find resistance, maybe wick into this fair value gap, and then move lower? That is that's a real trade that really could work. And it requires risk. It requires you to take the entry and still be wrong, potentially. So that's what I'm waiting for. I wanted to see if it wants to come back up here, and I probably would take the trade short. Could it lose? 100%, it could. That's the risk you take. But when you identify your trading model, you have a higher probability of success. Yes, I do. I teach all my models inside the academy. And on top of that, Sierra, you would have access to me in the Discord at any time with any questions, not just while I'm streaming. I did drop, I don't know if you were here yesterday, but I did drop a discount code. VDay 100. And you just go to dtjacademy.com. All right, so we got 1017. Let's look at the 5-minute here. I like that. We closed below that. I like that. 30-minute here. Hourly. I like that. 4-hour. Okay. I'm not opposed to taking a stab at this. It's my model. It follows inside my risk management or inside of what I want to see happen. Oops. Sure. And it doesn't look like it came up all the way for me to take that entry. So I'm not going to do anything. I'm going to be probably pretty strict. I want it to see it come into, son of a gun. I keep doing that. I had my finger on the wrong button. I really want it to come into this fair value gap and wick up into there. And that's where I'll probably take my short. Again, it's not a signal. This is simply me following my rules on what I think I want to take a trade, and it still could lose. It could still be a loser. That's part of the game. So here's the thing that it did just do. We did hit this low right here. So that's the risk I was willing to take, is that if it hits this low, which I knew it could, if it hits this low right here and doesn't push past this, it's going to go without me. But if it has the juice to get up to this level, that's where I'll take this trade. And my thought behind it is this. We are in a market that has huge candles, and my stop loss is only 20 handles. So I need it to get to these higher points, these places up here, before I take the entry. Because if I was to take the entry right here and then it does decide to go here, well, guess what kind of that? Look at that drawdown. That's 16, 17, barely just under 20 handles. That's too much risk for me. So I would rather it come up to the level that I want before I take the entry. And I'm not a fan of the time. We're at 11:20 right now. And we're in between macros. So do I really want to take this? Maybe it will give me 20 handles and I could take it. Let's see if it gives it to us. It tapped the breaker right perfectly. I'm not stressed to take this trade. I'm only taking it if it comes to me. But if you look at price, we've covered every single fair value gap except for the big explosive moves away. So I would put my money on it coming back up to here before it wants to run away. That's kind of what I'm thinking. And if it runs without me, it goes without me. All right, it's going to run without us. It tapped the breaker perfectly, and it's probably going to run without us. Now, do you see that? This is one of my models. Now, I could have got in here, and I could have got in here, and it would have worked. I could have got in here, and it could have worked. But I didn't, because I wanted it to come up here, and I wasn't stressing on trying to take the trade. And I missed it as a result of it. But this is proof that this model works. This is proof that this model is a profitable model. Now the question is, can you wait for it? Can you only take this trade instead of taking everything else that shows up? Look at that. Look how it just took all of that profit away. This is conducive of it not being a macro. So I'm still interested in this if it wants to give that to us. Yeah, I still see lower prices here. How is that a breaker? And this will go into the details, but the short of it is, the course goes into that. We have a high, low, higher high. And then we break below it, and we come back up and tag it right there. Oh, thank you. My fault, folks. My fault. I thought I was going to take a trade, so I switched over. Okay, so here we have a swing high. We have a swing low. We have a higher swing high. And then we break below that swing low over here, and that's our entry. Now, I'm telling you the pattern. There's way more to just taking the pattern trade. It's knowing when to take it, because there's many of those that fail. But this is looking nice. This is looking nice. I wish I was in it. That's looking pretty nice, folks. We waited for it. We called it out. I just wanted it a little bit more. Now let's go into another issue traders have, is the trade didn't hit their level. The trade moves away where they want it to go. Now they chase. They get in while it's dropping. They're like, oh, this is it. I can't miss this. And then they find out that the next candle, this candle right here, decides to run all the way back against them. And now they go from trying to chase the trade to in drawdown by 20 handles. And you can't sustain a 20 handle drawdown with proper risk management. This is how it gets you. Do you have the self-discipline to say, all right, I missed my trade. I'm not taking anything until I see my setup. and I take my setup when my setup is there, not after it showed it. If I was going to take it, I should have taken it on this candle right here. But I didn't because I wanted it to reach right there, and it didn't. So now I have an issue of the feeling of, oh man, this sucks. I'm missing my trade. It's going in my direction. Okay, it's probably going to go all the way. I should just go short right now. I should go short right here. This is it. I'm going to go short right now. And then it starts running against you. 10, 15, 20, 30, 35. And guess where magically sometimes it's just going to stop perfectly. Back at your original plan. Your original target where you wanted to go. I can't tell you how many times that's happened to me. I chased it and then it comes all the way back to where I wanted it to go short. But now because I have a 38 handle loss, 20 handle loss, I'm emotionally drained. I can't take the trade. What if I'm wrong again? I'm scared now. All because I couldn't control myself when it was running away and I missed my entry. So I missed my entry right there. But I'm not going to take it. I'm going to still wait to see if it wants to come back to this level, find resistance, and then maybe run my direction. Tony, 100%. Tony, you could do a whole lesson on that right there. And that is why, Tony, I would say affirmations are so vital. Your belief that you can do this is so vital. Because people want the proof that they can do it before they actually start following the rules. But then they're self-sabotaging themselves. So your affirmations, I just showed on the screen the pages and pages of affirmations that I write down to constantly remind myself to not get caught up in how I'm feeling. It's just, I'm talking with this passion because I've struggled with it for so long. And it still rears its ugly head back into my trading. All right, so look at this. Look at this candle. Man, we thought we were missing this trade. We thought it was running without us. Oh, man, it's just, we're missing it. We should try to chase it. We need to chase. We have to chase it. It's our duty to chase it. And then, magically. Now, is it going to come all the way back up here? I have no idea. I have no idea. I really don't care. Because I'm waiting for the trade to come to me. I'm waiting for the trade to come to me. I mean, price action does overall look very good. It's honestly why the only reason I'm still on right now. Okay, so here's why I'm okay with it coming back up here and still dropping. Did we hit any significant level with price coming down here? I look left. On the 1 minute, no. What about the 5 minute? We're inside this large 5-minute fair value gap. Okay. Maybe we came up to the middle of it. Let's see if we hit the middle of it. Did we? Look how we hit the exact middle of that consequent encroachment. Now, this right here makes me question going short right there. Look at the precision of that low. It makes me question that entry that I've been talking about before. So this is why you have to filter through and run through different time frames to see what signatures and price it's showing you. Now, could this just be there and it could still run lower? Yes, it could. But it's something I have to decide if it's going to hurt me or not. Now, no, I don't like that. Really doesn't care. Really doesn't bother me. We have a 15-minute inversion right here. I think we run lower. I'm still in it for the lower. Richard the Beast. Again, you could still use this as an entry. It's within the rules of this low. You could have used this. You could use the breaker. I'm personally waiting for that. That's just where I'm at. That's what I want to see. It also has an order block right here and a fair value gap. I just want it to hit that. And if it wants to continue to do this up and down right here, well, I have time. I have time because it's 11:34. When it gets to 11:45, 11:50, I'm hoping that it wants to hit it right around that time because that's when I'd really be interested. Now we're coming up to it. Let's see if it gets there. That's another entry. Look at that wick on the 15-minute fair value gap right at the center, right at the midpoint. Another potential option. It depends on what you're deciding your entry point is going to be. I've already come up with my plan, and I'm okay if it runs without me. My plan, entry, this fair value gap. That's my plan. If it doesn't, that's what I've been. I've written down 1,000 times. My success is my ability to follow the plan and not speculate. Now, your plan could have been the midpoint of this 15-minute inversion. Your plan could have been this breaker. Your plan could have been this low. But whatever your plan is, follow your plan. Stick to that plan. Don't change it. Thurball, welcome. How you doing, my friend? You have a small volume imbalance on that 15 minute? Oh. Yeah, I see that right there. I really wanted to come deeper though. I'm looking at the order block right here. I'm looking at that order block. 1 minute order block right there. All right, entries there. Let's see if it's going to play out. So that is my max that I'm allowed to take. And if it goes higher than this, I don't want to take it anymore. 20 handle stop loss. And it's not looking like it's in my favor here. So I'll probably get stopped out. But that's part of the game. That's part of the game. If I get stopped out, I get stopped out. And guess what? It's a one and done trade for me. I won't be taking another one. It's not looking good. Now we are at 11:40. We still have time. 5 minutes before the lunch macro, but I would love to see if it wants to run lower. If this closes green, I'm going to be screwed. Yeah, this is going to stop me out. All right. So there it is. We took a chance. We took our target. It didn't play out. Now, if I go back and I do my analysis, my job now is that I have a losing trade. I need to go back and I need to analyze what potentially could have caused this for me to have a wrong analysis. And if I go back and I look, my question is going to fall right to there. My analysis is going to go, well, man, it respected the discount portion of that fair value gap. This whole lower half, it didn't want to run into that and stopped right at the middle, which is a sensitive area on a fair value gap. The next thing I'm going to look at is I took my entry at the point I wanted. Was it just going to sweep this liquidity right here and then run in our direction? If that's the case, then I can't do anything about my trade. It just so happens to not run in my favor, because I can guarantee you that I would not be interested in this trade in my breaker if we were to run that high. And we did. We ran the high. So I would not be interested in that breaker any longer. So then you journal this. You journal your experience. What happened? How did I feel? Did it look good? Well, for me, I'm journaling, well, this happened really nice. I had an opportunity here, waited. Happened here, I waited because I wanted that fair value gap. And we closed above it. So the next thing that I could have done is saying, all right, should I have closed my trade early? Closing the trade early means I would have closed it on this 1136 candle because we inversed this fair value gap. That would have been my next analysis that I would be doing, and I would be deciding, should I have closed this trade early? And I think the right answer is yes. I think the right answer is yes. If I look at my analysis, I looked at how we handled this right here, that it would have been safe to say that if we close above this inversion right here, that we may see it run all the way to this high. So the combination of these things, this is me doing my analysis, figuring out if I could have done something different. I think if I was to go back and do this again, identifying this, okay, that's one thing. Maybe we still want to run lower, sure. But if we show another premium discount array or premium array violated in the form of this inversion, then I probably should consider closing my position. In this case, I would have only lost 5 handles compared to 20. I would have saved myself some risk, and I am able to do that by going back and analyzing my losses. And that's what I'm doing here, is analyzing the loss that I took for my trade that ended up going that direction instead of the direction that I was hoping it to go. And this looks very intentional. So with that, folks, we're going to end there. We'll be back here tomorrow at 9:15 New York Standard Time, continuing with our analysis, our trade, our bias, our trades, and all that good stuff. So thanks for hanging out with me today. We definitely went longer than normal. We were on here for about 2.5 hours. ICT did that on a trade about a week ago. Use it now as an inversion breaker. Yeah, Tony, the only thing, sometimes I go back and forth on taking the close and not taking the close, because sometimes you'll get these amazing wicks and then it completely runs back against you, or it completely runs in your favor before the candle even closes, and your opportunity was to enter on the wick into that fair value gap. And that's how I was treating it. What I should have done is, instead of committing to the trade and saying, oh, I know this and I don't want to be wrong, I should have taken this entry like I planned, expect it to wick back down, but obviously it didn't. So then I should have reevaluated, saying, okay, it didn't wick back down like I wanted, like it did over here. It did over here, right? It wicked back down immediately. Well, it didn't do that here. And on top of that, we closed above the inversion. So that should have been enough for me to say, you know what? It's not what I'm wanting to see right now. Let's close the trade. Let's admit our defeat before our defeat becomes exaggerated. Now, it's still within my risk parameters of 20 handles, but I could have saved myself 15 handles by closing that trade early because of me analyzing this now. Now, post-analysis is always clearer than your analysis when the hard right edge, when you don't know what's next, you know? But that's that for today, folks. We'll be back here tomorrow. Thanks for hanging out with me. God bless. Stay safe. Manage your risk appropriately, and we will see you guys tomorrow. God bless.